It's Thursday, September 22nd, 2016. This is Ron Feinstein, the Consummate Price Behaviorist with New Wave Forecasting. Was it a good day today or what? You know, it's not that often you come in bullish on just about everything and just about everything goes up, but that was how it worked today. And not only that, we hit a couple of big targets in the gold market and in the crude market, and everything else is pretty much going according to plan here. So let's start right off in gold again. You know, I had revised the target up to the 1345 level, the 76% retracement, and look at that. We got within $1 of it, and I put out an intraday update suggesting that the target was met. Now, I think, not that it matters, but it may tomorrow. Notice the RSI divergence here. Again, we're still holding above the moving average, and we're making higher highs and higher lows, but we're starting to see a little wave overlap. So I think we're probably going to move up one more time at least, maybe test 1350, and then perhaps come on down. But the risk is getting pretty high here now. And again, the move, for all intents and purposes, could be complete. And again, no reason to stick around too much here. The market's too easy to have things not go according to plan. You know, I mean, looking at the crude, it's essentially the same picture as, well, I shouldn't say essentially, but I mean, the philosophy is the same. In crude oil, given that we had a 5-wave decline, I was only looking for a 62% retracement. And I put out that update as well. It was about the same time that crude made its target, that gold made its retracement as well. Here, too, would I say it's done? I don't know. I would not go so far as to say that. We'll have to see. This is holding above its moving average here, and there really wasn't any momentum divergence. However, I must say that normally when a price market recovers and it fails against the rising resistance RSI line, that's usually a bear market rally. But this decline is not starting off like anything, so we'll see. It's going to have to be a real-time update on Friday. But again, big move up here, hits the initial target on a 62% retracement. I suppose this would be a good time to at least consider where the 76% retracement might be in case prices keep going. And now we'd be talking about tacking on another $1, just somewhere above 47. So I suppose if crude pops one more time, $47 would not be unreasonable. So it's really important to see what happens if it breaks. We're still got RSI support here. And again, higher highs and higher lows, this trend is still up. Looking at the 10-year, there's absolutely no change in this forecast. If it ain't broke, we don't fix them. I believe we're now in a small fourth wave consolidation, probably going to be a triangle or something like that, and then we should have one more run up above 131 again and test perhaps that 76% retracement. And then I think we could be once again looking to be on the sell side of the notes. But right now, it looks to me like we're still going higher. Higher highs, higher lows. This market too above its key moving average. RSI kind of waffling, but again, bear market corrective rally. All we think is a little bit higher, and we'll be looking at the short side. Moving on to the S&P, we have absolutely no changes in this forecast either. I think we are still rallying in this presumed C wave, and there is a remote chance that the top of wave 3 could have been seen today, but there's no wave overlap, so I don't even think we've seen the top of wave 3 of this particular wave yet. And then if we do run out of steam somewhere in the neighborhood of 2180, we could considerably pull back to 2165 or so. But that may be as bad as it's going to get here. And then it looks to me like we are going to probably have a run at 2190 based on this price action. So the E-mini, the forecast third wave goes on, no change. And there's also, surprisingly, no change in the NASDAQ forecast for the ongoing Wave 3, which looks to me now is going to take prices well above 4,900. And then ideally from there, we'll have a fallback towards 4,850 or maybe even below before moving higher again. But this forecast also ain't broke, so there's no change here. Wave 3 in the E-mini NASDAQ presumed to still be underway. Well, the euro had quite a pop here. Failing near 113, but undoubtedly blowing out most of the week 112.50 sellers. Now, I think this has gotten a lot of people pretty bulled up about the market. And honestly, I think it's just a lot of nothing. I said this yesterday. I think the euro is in a hurry going absolutely nowhere. It's probably more likely to be on the, I prefer being on the long side than the short side. On this dip here, somewhere between 112.20 and 112 might be a good spot for a B wave to stop going down at any rate, but this could turn into a triangle. It could turn into a million different things. And again, as impressive as that rally may look, as I said probably every day this week, the market has been going in this range for so long, we can't really trust these wave patterns. So the retracements are pretty much the way to go, and support and resistance. So again, we'll see 112.20 to 112, probably an opportunity to buy the euro, but I want to make that call real time tomorrow if I'm present, because it's a pretty risky one. But again, most likely looking for a break towards 112 and then a move back above 113. That would be the ideal scenario for me in the near term in the euro. I'm not going to go officially bullish here just yet for Timer's Digest, but I do consider it. And our last market is the natural gas. And boy, you know, I talk about these reports every week because, man, they just unbelievably impact these markets. I talked about the potential for the market to trade above 310 and break 3. Didn't think it was really going to happen, and it came awfully close. So the real question right now, and again, there is no wave overlap. This could be a classic natural gas bear trap setup below $3 here for one more push towards 310 plus. I've got to stick with this count. It's bullish. You know, if it was any market but nat gas, we could say something perhaps. But, you know, again, there's no wave overlap. 294.5, give or take. It would bust this particular forecast, you know, but don't be surprised if we pop out of this thing and roar back up towards 310, 311. Just got to stay with the optimistic view here. And so far, the courtesy dip call looks like a good one. So that's pretty much a wrap here. A lot of good things happened today. The first day of fall, in line with our expectations. And we'll see what tomorrow brings. We'll start with some real-time updates first thing in the morning. And then I will undoubtedly put out the next daily update on Sunday. Ron Feinstein, New Wave Forecasting, September 22nd, 2016.